and log back in to reset your system. And now, I'm very excited to introduce today's webinar. Please take it away.
Hi. Okay, we can go ahead and get started. First of all, thank you all for being here today. We really appreciate you taking the time, especially as business owners with already full plates. Today's session is called How Smart Business Owners Use Capital to Grow Without Crushing Cash Flow or Wasting Time with Banks. And that title is very intentional. Today's webinar is really focused on education and perspective, so helping business owners better understand how capital, cash flow, and growth strategies work together, and how to avoid some of the common mistakes that can end up creating challenges down the road. Quick introduction, we are AMP Payment Systems. So we are a merchant services company, meaning that we work with business owners every day on how money moves through their business, whether that's payments, cash flow, or financial efficiency. Over time, one thing became very clear to us. Most business owners don't fail because their business is bad. They struggle because they don't have access to the right financial tools at the right time, or they're forced to waste weeks chasing the wrong ones. One thing that we have seen over the years is that a lot of business owners blame themselves when cash flow gets tight. They assume that they did something wrong or that struggling with timing means that the business isn't healthy. But the reality is, even successful business owners deal with timing pressure. Revenue and cash flow are not always the same thing. So a business can look profitable on paper and still feel pressure week to week because money moves in cycles. Expenses happen immediately while growth and revenue often take time to catch up. And that disconnect is where a lot of stress comes for business owners. So today we're going to walk through how smart business owners approach financing as a strategy and not a last resort, and how to explore options without risking your credit, locking yourself into something that you don't actually need, or dealing with endless red bank tape. I'll also leave plenty of time for questions at the end. So if you could just throw them in the chat, and I will try to get to all of them at the end. Before we jump in, I just want to take a moment to introduce myself so you know who you're hearing this from today. My name is Raven, and I've been with AMP Payment Systems for just under 9 years. So during that time, I've had the opportunity to work in a lot of different areas of the business and also support a wide range of merchants and agents across different industries. I've worked closely with business owners who are trying to grow, solve operational challenges, improve cash flow, streamline payments, or simply just figure out what tools actually make sense for their business. I've also spent years supporting our internal teams and agent partners, which has given me a pretty broad perspective on what works well and what tends to create problems down the road. So everything that I'm sharing today comes from real world experience and real conversation with businesses, not just theory or generic material. My goal for this webinar is really to give you practical information that's easy to understand and actually useful, whether you're actively looking for solutions right now or you're just trying to stay informed about what's available and what's changing in the industry. I also want to be really clear about who this session is designed for and who it's not. So this webinar is specifically for business owners, typically doing anywhere from about $30,000 up to $5 million a year, who are actively running a business and not just thinking about starting one. It's also for owners who may be profitable, but you're still feeling that cash flow pressure. And that's more common than most people would like to admit. You can be making money on paper and still feel tight month to month. This is also for business owners who want to grow, whether that's hiring, expanding, marketing, or upgrading equipment, but you don't want to wait weeks or months dealing with traditional bank timelines. And most importantly, this is for owners who want options, Not a single product, not a one size fits all solution, but the ability to see what actually fits their business. If any of that sounds like you, then you're absolutely in the right place. And hopefully that's making sense so far. Before we go too far, I want to acknowledge that businesses joining today are probably in very different stages. Some of you may be solo operators or running very small teams. Some may be actively growing, and others may be already very well established and scaling. Wherever you fall on that spectrum, the strategies and ideas we're covering today are designed to be practical and adaptable for different business sizes and growth stages. Most business owners aren't brand new, but they're also not sitting still. They're trying to scale, improve margins, or modernize parts of their business. And that's exactly the group this conversation is designed for. So, let me give you a real world example of what this looks like, because this is something that we do see all the time. So, imagine a medical practice that's doing really well. They have consistent patients, steady revenue, and a solid reputation in their community. The owner decides that it's time to upgrade their equipment, giving them newer technology that allows them to offer better services, attract more patients, and stay competitive. Along with that upgrade, they also invest in marketing to promote these new services. The goal is growth, more patients, higher value procedures, and stronger long term profitability. But here's where the cash flow challenge shows up. The equipment needs to be paid for now. The marketing spend starts immediately, but the increase in revenue from those upgrades does not happen overnight. At the same time, rent is still due, payroll still has to be met, supplies, insurance, and day to day operating expenses don't pause just because the business is investing in growth. On paper, this is a healthy business making a smart decision, but in real life, the timing doesn't line up perfectly. The owner isn't worried about whether the investment will work. They're actually worried about making sure everything stays covered while the business ramps up. And this is where traditional bank financing often falls short. A long approval process or a rigid loan structure doesn't solve the timing issue. What the business actually needs in a situation like this is flexibility, something they can draw from as needed, cover expenses during the transition period, and then pay down as the new equipment starts driving higher revenue. And that's a cash flow timing problem, not a business problem. And it's exactly the kind of situation where having the right type of access to capital matters. And what's interesting is that this doesn't only happen to struggling businesses. In fact, we often see it happen during periods of growth. And growth sounds very exciting, and it is, but growth also increases pressure. More payroll, more inventory, more marketing, and more overhead. So, the very thing that's supposed to help the business grow can temporarily create more stress on cash flow if the timing isn't managed correctly. Now, this is where a lot of business owners get frustrated and honestly confused. So, on paper, the business might look fine, revenue is coming in, sales are happening, but cash flow still feels tight. And the reason usually comes down to timing. Expenses don't wait. Payroll, rent, inventory, marketing, those bills are due on specific dates, whether customers have paid you yet or not. And here's the part that catches a lot of owners off guard. Growth actually makes this worse. So as the business grows, those gaps get bigger and not smaller. Traditional banks aren't built to solve timing problems. Their processes are slow, and by the time an approval comes through, the opportunity or the emergency has often already passed. So this isn't a bad business problem. It's a cash flow timing problem, and it's incredibly common. I don't know if any of you have ever experienced this where revenue looks fine, but the timing feels tight. And this is incredibly common. It has nothing to do with poor management, it's all about timing. And what we usually see is that this resonates with almost everyone at some point. Even very healthy businesses experience timing gaps, especially when they're growing, investing, or waiting on receivables. This is one of the most common challenges that we do here, and it's not a sign of poor management. This is a part where a lot of business owners start blaming themselves, and they really shouldn't. Traditional banks are not bad, they're just built for a very specific purpose. So banks are designed to manage long-term risk. They're not designed to solve short-term timing problems. Their approval standards are mostly one size fits all. So that means if your business doesn't fit neatly into their boxes, it doesn't matter how healthy or profitable you actually are. On top of that, their underwriting process is very slow. There's paperwork, documentation, reviews, all of which take time. And when timing matters, slow doesn't always work. And finally, for many business owners, one rejection ends the conversation entirely. There's no second look, no alternatives, and no guidance on what might work instead. Again, this isn't about bad businesses. It's about systems that weren't designed for how modern businesses actually operate. And to be fair, traditional banks do serve an important purpose. For certain types of long-term lending, they can absolutely make sense. The challenge is that many modern businesses move faster than traditional banking systems were originally designed for. Business owners today are dealing with rapid market changes, rising costs, staffing challenges, marketing demands, and customer expectations that shift constantly. So when timing matters, waiting several weeks